Good morning. Today is Friday, July the 7th. The time right now in Singapore is 11:31 in the morning. And today marks the end of the first trading week for the month of July. And overnight, we have a bit of volatility in markets, in particularly the equity markets. We see that the market has basically pulled back quite sharply, as you can see on the chart here. This is the Dow Jones 4 hours time frame. Overnight, we have the ADP job reports suggest that the market in the job markets in the States is very resilient. Market having very low expectation going into this ADP job report last night, but the number that came out surprisingly strong. New jobs available is bordering of just under 500,000 jobs. And if you want a perspective, this is the highest since March of 2022. So we can see that the job markets in the United States is very resilient. Now that causes a little bit of a heartburn here, because based on these very strong job numbers, and of course last week we have the upward revision in the Q1 GDP in the United States from 1.3 to 2.0. So you can see that overall, based on the GDP as well as the job numbers that we saw last night, it suggests that US economy is doing okay. And that means the Federal Reserve will have the cover to actually aggressively hike rates going into the balance of the year, perhaps into next year. Because the economy is strong, that means to say the economy can withstand higher interest rates. So this is what is causing the price to come back down yesterday in terms of equity. We can see the Dow Jones market actually picked up at 34,467 last Friday, and we have a massive pullback. And overnight, we can see that the market pulled down by more than 1% last night in the Dow Jones. And at this current rate of decline, the idea of a three-wave corrective pullback from the high that we saw 3 weeks ago at 34,588.7 now is becoming looks like it's going to take shape. And if this trajectory continues to the downside, we are possibly looking at a dip into the 33,300 to 33,500 range here, which I have previously marked out to be an area of possible the return of buying interest here. So do watch out for the continued weakness here. Do not sell into this drop, because I think it is for now looking to be just a technical pullback and not a total reversal in trend. So over in the S&P 500, we also see a bit of a pullback, but not in the same breadth as the Dow Jones itself. We have a market opening on a gap down and traded to as low as 4,385 overnight. But you can see that the magnitude of this fall is nothing compared to what we are seeing in the Dow Jones. So definitely we are not seeing a total reversal in trend just yet. Okay, nearby support is probably going to be around 4,330 levels, which is marked out by this blue horizontal line here. And even if the market do go under this line, the area between 4,002 to 4,003 looks like to be a great place for the market to find support here. So do again watch out for these levels here. In the Nasdaq 100, we have a little bit of a pullback. You can see the magnitude wasn't fantastic. That means to say that after the failure to challenge the 15,284.65 at the on Thursday itself, the market now is looking to trade to the downside in a corrective three-wave pullback, ideally looking at a drop into 14,500 to 14,700 range. So again, this is a level that may actually see the emergence of buying pressure again. So in the Asia market, we can see that the Nikkei has actually come off a lot more resolutely, but now is sitting on top of this range, which I have previously marked out to be an area of possible buying interest. That level is 32,000 to 32,300 levels. The low so far in the first half of the morning trading in Nikkei is at 32,327.9. So it's sitting just above this level. May dip into it, may not even dip into it. So but basically here, if what we are seeing is a three-wave pullback, then market should be stabilizing soon before it ramp up higher beyond 33,773. Over in Hong Kong, we see a lot more a dramatic drop in prices. Yesterday, we already knew that the services PMI in China has already starting to decline. This will be the third month in which it is declining, suggesting beside the manufacturing sector, the services sector is now under pressure in China, and that of course translates to lower prices in what you call that, the Chinese stocks listed in Hong Kong itself, and of course it will bring down the Hang Seng Index. This morning in the first half, we have the Hang Seng Index trading at 18,279.3, and it's getting very close to the May 31st low at 18,045. So we can see there's a very good chance market will dip perhaps to challenge this level at 18,045, or perhaps even go marginally below to as low as 17,730. So do watch out for the possibility. I do expect some kind of buying pressure, buying interest to return from this bracket of prices here. Anything between 17,730 to 18,000, I think that will be a great level to pick up the Hang Seng, or again, because there is a possibility of a rebound from here. Okay. And over in mainland, we can see that the Shanghai Composite Index also pulled back, but it's currently trading this morning at 3,189.3. Again, it is looking to be a little bit soft. Would it be enough for the market to hold on to current level and rebound? Quite possibly, because if we do a simple Fibonacci retracement, it looks like this level do have areas in which it should be able to hold out, and that level remains to be seen whether it can or cannot do that. And I would think somewhere around here. Okay, anywhere between 3,180 to 3,195 should be able to see some kind of support here. So if that's the case, then we probably will see a rebound back to challenge the 3,276.5, which was last traded in June 16. So three-way pullbacks are very, very normal, and if we possibly can expect such a move to actually unfold. Over in energy markets, we can see that crude oil managed to recover after a mysterious drop to $70.18. Of course, that was in reaction to the very strong ADP job numbers that was released last night. And after that, the market actually rebounded from this low. Now you can see that previously I marked out this blue horizontal line, which I think is where I think the market may actually find support. That level was at $70.31, and voila, what happened? Market actually dipped below that for a while and then bounced back up. So now the prices is back near to $72. So at this current trajectory, there is every possibility the market will go into $73 to $74 range before it see any kind of selling pressure. Okay, so in the meantime, do watch out for an extended run into $73 to $74 per barrel. Over in gold itself, you can see gold actually also pulled back to $1,902.70, again on the back of the very robust ADP job numbers last night, and market seems to be stabilizing. If this market does not go below 1,900 again, there's every possibility we may see a rebound from here beyond 1,935 to perhaps 1,945 to 1,955 levels. So this is my immediate target for this next move here. Over in silver, we have seen the market do a three-way rebound into my primary target range of $23.27 to $23.50 with a high of $23.31, and then we see a very sharp pullback to $22.53. Now this is where it gets interesting. Assuming we are going to see a larger degree three-wave rally here from the low of $22.53, then there is another possibility market may actually gun beyond $23.31 towards $23.70 to even for $24. So this will be my next target if the market started to rise again. Over in dollar index, you can see dollar index has also hit a price level that is making it very conducive right now to do counter trend. The bounce from 101.48 to 103.27 happens in a three-wave rally, which is no surprise because I have been talking about this level between 103.26 to 103.57 for quite some time now, which is my target range, and the market actually go into this bracket of prices just marginally at 103.275 before it pulls back down. So this lay the condition for an extended decline, perhaps even below 101.48, targeting somewhere between, I would believe, 99.4 to 100.15. So this will be my next target if the market do decline below 101.48. Over in the euro dollar, if the dollar is supposed to come down based on what I think it's going to do, then obviously the principal currency is going to rebound. So again, euro dollar did not go down deep enough, although it actually dipped below the previous low seen on June the 30th at 108.35 to with a low at 108.33. So it was a marginal breach, but then market rebounded. I was hoping the market can actually go into 107.70 to 108.10. Alas, it did not quite happen. So again, this is not ideal for me, but I think based on this, with a double bottom here, the market may be getting ready to rally, perhaps even before beyond 110.12 that we saw on June 22nd. Now, in the sterling market, it does look a lot better in terms of the structure itself. You can see that the market in sterling dropped from 127.80 all the way to 126.73 last night before it rebound. Now, this area again was marked up previously to be an area where possible demand may come in. The area is 126.60 to 126.90 levels, and we have a dip into this level, and market seems to have rebounded. If we can sustain this rebound beyond 128.5 here, then the market is on the way to at least minimum 128.90, perhaps even to challenge the 133, which I have marked out to be my medium to long-term target for this move. Okay, but at the minimum here, if the market do break 128.5, do not buy. Okay, if you want to buy, you're going to buy somewhere now. Okay, and target for the move beyond 128.5. I think that will be my play going forward if I want to do any trades in the sterling pair here. In the Aussie market has also went down to just under 0.66. The previous low here is 0.6595, so it did not quite break it, and we have a double bottom here, and this is actually laying the conditions for a rebound again, because this bracket of prices, although it's very wide, was actually anticipated to be an area of demand here. The level is 0.6550 to 0.6630, and if we can get a rebound from where we have where the low was last night at 0.66, we have a possibility of a challenge of 0.6705, perhaps even to challenge this horizontal blue line here, which is the peak that we last saw on June 27, mark out at 0.6726. So this bracket of prices between 0.6710 to 0.6735 appears to be a viable target if you are going to do a short-term trade on the Aussie on the buy side. Over in dollar CAD, we are also seeing very nice development here. The market has rebounded from 131.16 all the way to 133.73 in a very neat three-way equality rally. And my bet is that the market may have already hit its target, perhaps maybe even a little bit more, but maximum, I don't think it will be anything beyond 134.12. So if this is a trade that you want to do, maybe you can do the a counter trend trade, basically to sell this and then go for at least a 132 to 132.20 target. Over in dollar yen, we are at that point in time whereby the market again is not sure that it wants to take it beyond 145. The market peaked out at 145.07 last Friday before the long weekend that we saw this week itself. So the market is basically going down, but it didn't go down much, okay, compared to the other currency pair. The low traded was 143.55, and it is still struggling. But by and large, I do see there are already traders with holding long positions trying to get out of the market without causing a collapse. So if everybody start to parlay on the short side of this market, there's a possibility it may actually go down all the way below this near-term support line represented by this rising blue, this rising black color gradient line here. And if that's the case, the market closed below this line here, there's a very good odds that it will continue to decay all the way to 140.25 here, okay, which is the horizontal blue line that I marked up here. Now, over in digital assets, we see further pullback in Bitcoins. Now, Bitcoin right now has only marginally taken out the 31,458 that we last saw on June 23rd, with a marginal high at 31,500, and then turned back down with a reversal pattern here. Now, this candlestick here is a major reversal pattern here, so that means prices should come down, and it did come down. This morning low is 29,722, and the near-term support is probably around 29,010. Sorry, 29,100 to 29,550. So this bracket should be able to hold. What looks like two possible scenarios here. Either the market is doing an expanding triangle, which no confirmation yet, okay, because we are seeing higher highs and perhaps even lower lows. If we can get a dip below $29,508, that it supports the expanding triangle scenario, or the market is possibly doing a irregular three-wave pullback, okay, again targeting between 29,100 to 29,550. By and large, this area should be able to hold, and if you are in the market to look for a buy, then maybe this bracket will be a good area to take up some long position, but allow this market to resolve itself, because right now it can be anything but a correction. It can also point to the possibility of a reversal itself, but again, that possibility is not high on my list. I still think that this is part of a corrective pattern. We are probably going to see higher prices, much higher prices after the resolution of this consolidation phase. That's all I have for you. In the meantime, you take care, and I wish you guys a great weekend ahead, and I'll come back to you again on Monday morning. Bye bye. Take care.